Welcome back to the YouTube channel, guys. Kalisa here. Let's go over what happened last week, how we got to the position we are in from last week, and what we can look for the next week. Let's get into the charts. First, we need to clarify long term that we are in a bullish uptrend. We're on a US 30, by the way. We're a long-term bullish uptrend, okay? We need to notice that we've had a pullback, but we're also expecting that price may have another leg down. So let's break down the reasons why. Let's quickly go to the monthly time frame. We always do top-down analysis. Now, the monthly time frame, of course, this candle is not finished yet because it's only the 24th of May, so we still have another week to go. But we can still take into account what's happened so far. Now, what we need to concentrate on is the areas we've left behind and how price moves. This is the monthly candle that took us to all-time highs, and it left behind this demand level. Okay, so we expect price to push back down into this level before hopefully giving us the new high, all-time high on US 30. So knowing that this is what we're expecting, it gives us an indication that we hope that price will continue back down. But of course, we can't just wait for that to happen. We have to play the market as it goes along. So let's go back down to the weekly. So now we can try and put together the story of what's going on. We've also left a minor weekly demand level here as well. I'll make that one a different color. Let's go with red. That looks crappy. Let's go with blue. That looks crappy still, but anyway. So we have the minor weekly demand level. Now, the reason why I expect price to continue back down to this level and then push back up is because we know that price moves in waves. We've got the low impulse leg. We've had the retracement back to the high. And now we've had a bearish weekly engulfing from last week. And then we're hoping for price to continue back down. It's really that simple, guys. All I'm hoping for is price to continue pushing back down. But I do expect price may come down, go back up for a double top, and then continue back down to roll over, and then roll over back down. The reason I expect that is because we had multiple situations here happening the same thing. So as you can see, price pushes down, goes back up to a supply level, drops back down, back up to a high, drops back down, retests a support structure level, drops back down, retraces back up to the high, drops back down. Now, when we go down to the lower time frame on the dailies, we're going to cover this area. You will notice that in this area, whenever price did do that, we had, let me quickly get rid of it now. When price did push back up, we had a double top. Price retraced back up, we had a double top. Price pushed back up, we had a range before the continuation. This was the only time we didn't have a double top. So, and of course at the bottom as well, when price turned around, we had a double bottom. Price turned around here, we had a double bottom. Price turned around here, we had a double bottom. Price pushed up, double bottom, pushed back up. So as you can see, daily moves in double tops and double bottoms. Same thing down here, double bottom, double bottoms, double bottom, and of course at the tops, double tops, double tops. I hope you get the idea. Double tops, double bottoms, range. This one's an anomaly, but you could probably count this as a double bottom because in the higher time frame on the weekly, this probably would have been double bottom, double tops. So you can see the majority of the time there's a range or a double bottom or a double top. Okay, so what we got down here was a double bottom. So I'm hoping that as price has pushed up, we've had this bearish engulfing level here, the bearish engulfing candle here, leaving behind this bullish candle. So which means we've left this supply level on the daily. So I'm hoping for price next week to retrace up here, spike into this area and create the double top to create then the rollover. And remember, we're expecting price to come all the way back down here. Now, I'm not going to hold a trade over there from up here all the way to down here. I'm going to play it as the week goes by and see what the price actually does give me. But I know that I'll be trying to hold for longer positions on this as I'll be trading with the long-term trend. As we can see, we cleanly broke this down in the past weeks that we had. This was the level. Let me quickly go back to the weekly. So we can mark out that this was the support level, the structure level that we were holding. Price came up, pushed back down to it, popped up, new all-time highs, pushed back down to the same support level, all-time highs, back down to the same support level, double top with all-time highs, same support level, broke it, retested it, and dropped back down. And it's come straight back down, back up to that same support level, closed back above it with 2 weeks ago. Then this week just gone, we spiked up and came back down bearish engulfing candle to reverse below that structure level, which is now a turn of resistance level. So these are the reasons why I expect that as this high has not been broken, we'll reject off it with the bearish engulfing candle. I'm hoping for price to roll over. Oops, wrong one. Now, of course, roll back over to these lows, and then after that, these lows. So, of course, we have to play it week by week, but we can see that when price drops after the first drop, the second drop is usually faster. So you can see this is the first one, like the retracement. This came back down in a fashion with 1, 2, 3, 4, 5, 6 bear candles, 1 bullish candle, and followed by 3 bear candles. Now look at the size of this bear candle and this bear candle. They're much bigger than these candles. So if this is going to be our third leg, so A, B, and C continuation, C is expected to be a bit quicker than these ones. So we may have 1, 2, or 3 maybe candles that will pop back down to these lows. So we've got to know that there'll be some sort of fundamental news that will give us this kind of volume. That was the wrong one. That will give us this kind of volume of about 4,000 points to move in the next coming weeks. So that's what really I'm hoping for. If we go to the daily, we can start to look at price action clearly now. So we can see that we had, let me quickly just tidy this up a little bit. We can see price was dancing around. When it came back up to spike, it left behind this supply level. Price spiked back above into the supply level. It then rolled over. Price has been pushing up. It left a few gaps that we're of course going to close on the way back down. We have this last bullish day, which was Monday 19th of May. We've now left behind the supply level. If I just mark that in a different color, let's go with yellow. So we're expecting price to hit a low somewhere, even if it's here anyway, or maybe possibly down here to 4700s. This is a low, and then we can have a retracement back up into the supply level, create a double top, and then roll back over. That's as easy and as simple as I'm looking for and what I'm waiting for. If I go down to the 4 hour, we also left another supply level. We can see that when we broke below, you see this last bullish candle, price danced around, wick. This is the breaker candle, and we left this. So we have a supply level and a supply level we're waiting for. So this is the golden area that I'm waiting for price to react from. Now I won't just automatically sell. I will wait for price to turn around, start create as lower lows and lower highs on a lower time frame. Then I'll start getting in, and of course I'll then be targeting the first immediate lows, and then secondary immediate lows, which I'll quickly just mark out for you. If I go to the daily time frames are always the best ones to mark your lows from, as they're the ones that most big institutions use as well. One. Price did wick around here as well. And final one, this one here. So these are the lows I'll be targeting as price is dropping back down. Quickly go to the 4 hour. I can tidy those up. We can see bounce. Just move that up here. We can see we've had multiple times. Let me move that down a bit more. Okay. Yes. You can see we've had multiple touches on this level as well. Bounce above, bounce back above, pushed off. So I'll be targeting this level first, this level second, and this level third for these drops. And the final one being this one down here. Those are the targets I'll be looking for. So if any of you who use fib levels, when it comes to Dow Jones, you'll notice that usually Dow either hits a high or a low. So for example, when price is going to come back down in here, it's very rare for Dow to just stop randomly somewhere in the middle and then turn back around. Usually it will hit a low and then turn back around. So as you can see, when we had this spike here, It's touched this level here, which was a major which was a resistance on the 4 hour. Bounce, bounce, bounce around, bounce, bounce, and then it gapped above it and rose above. Then it's come and closed the gap. But even when it did close the gap, look where it took out. It touched into these lows. Okay, so just be mindful that target levels are going to be important when it comes to Dow. Just always target lows on highs. Another example of this is when we're moving bullish. So as we're moving in a bullish manner, what's the best example here? You can see that as we're moving up, we're always reacting to the highs. We're always taking out highs. Mark out this high, this high, this high, and this high. So as price has pushed down, major retracement, on the way back up, you can see that if you held your target, all the way to the highs, it always tagged the highs before we had any kind of major retracements. It then moves up to the next high, tags the next high before it has any sort of major retracements. Price then pushes up to the next highs before it has any sort of major retracements. As you can see, this was the high created before the drop, tags it, and then retraces, consolidates. Next high moves up again, just jumped straight through, but then retested that same high. And of course, then after that, it then rose all the way back up to the all-time high. This is why I always use highs and lows. I never use fib extensions. I never use trend lines or anything like that. All I'm using is structure levels. That's all. And Dow is very good at following those. It follows those much better than NAS as well, by the way. Dow is always, like I said, usually it respects highs and lows. That's where price usually moves to and then reverses from. That's really it, guys. So that's what I'm looking for. That's just a basic breakdown. Basic, but kind of detailed enough for you to kind of understand what we're going to be looking for. I've been giving out these breakdowns every day in there. So I'll update you on price action, on how the volume's moving. If I get into any trades, I'm actually going to give out a few free signals as well. So make sure you join the Telegram group below. And again, if you like the content in this, like and subscribe. Happy trading, guys. See you next week.